A virtuoso can deliver a memorable performance on one instrument, but it takes a maestro to conduct multiple instruments to their optimal performance potential. That's why S&P Dow Jones Indices compose the S&P MAESTRO 5 Index. The S&P Multi-Asset Equal Risk Factor Contribution Index, or S&P MAESTRO 5, is a diversified, multi-asset, and multi-factor risk parity strategy designed to help investors hit the right notes across a range of market conditions. The instruments inside the S&P MAESTRO 5 Index work in concert, guided by a rules-based, dynamic methodology that's designed to allocate risk equally between its diverse mix of equities, fixed income, and commodities, while providing an additional layer of protection through an allocation to VIX futures. Beginning with equities, the S&P MAESTRO 5 features 4 S&P 500 factors: quality, momentum, low volatility, and dividends. Factors, also called risk premia, are characteristics that influence an equity's risk and return. Since individual factor outperformance can shift as market conditions change, we use a combination of factors to increase diversification and potential upside. The commodity piece of the S&P MAESTRO 5 is gold. We use the precious metal because it offers an inflation hedge, while also helping the index stay a step ahead of any potential dips in the equity market. The fixed income section of the S&P MAESTRO 5 is made up of 5- and 10-year U.S. Treasuries, because these are the bonds that investors often look to as a steady source of income. The index allocates risk equally among its components in order to protect against volatility. When risk goes up for one piece of the index, the S&P MAESTRO 5 dynamically adjusts its component weights, generally tilting to less volatile assets, in order to optimize risk and return. To ensure the index maintains its target volatility of 5% and its potential to outperform, a leveraged position of up to 150% can be taken daily on the total index exposure. A VIX overlay provides an additional layer of volatility and downside protection for the index. VIX, sometimes referred to as Wall Street's fear gauge, is used by investors to measure the level of risk when making investment decisions. The S&P MAESTRO 5 uses a mix of S&P 500 VIX short and midterm futures to respond to risk signals from the VIX curve. On a daily basis, the S&P MAESTRO 5 assesses those signals. When the curve is concave, there is no allocation to the S&P 500 VIX short-term futures index. But when the curve is convex, signaling distress in the market could be imminent, a 5% allocation to S&P 500 VIX short-term futures is triggered and can remain for up to 30 days. As a base protection against downturns and volatility spikes, the index also uses a 2% allocation to S&P 500 VIX midterm futures, rebalanced on a monthly basis to help maintain its protection against future risks. So what's the end result of the S&P MAESTRO 5's dynamic approach to risk and return? A multi-factor, multi-asset index that dynamically responds to changing market conditions and provides greater upside potential, diversification, downside protection, volatility reduction, inflation protection, and rising rate protection. To learn more about the S&P MAESTRO 5 Index and to explore the composition of this innovative risk management tool, visit us at www.spglobal.com/spdji.